What is up, YouTube? This is the Working Investor. Today I did an $18,000 shopping spree on X-dividend dates. We're going to talk about my purchases. We'll talk about my experiment with Roundhill. Is it Roundhill or is it a crappy investment like Roundup weed killer? Do I have to kill these weeds? And we'll talk about certain underlyings which did have a significant NAV erosion, at least temporarily, with the dividend payouts, and AMZ, which actually did not dip, which could be a good thing. And we'll talk about the purchases. So let's talk about ex-dividend date versus dividend date. So a lot of people, they wait until they get their dividends, and then they use their dividends to kind of like buy in further into their funds. The problem is that not necessarily is ex-dividend date the payout date. If you look at YieldMax's chart, they talk about today, August 7th, being ex-dividend date, tomorrow, August 8th, being the payout date. But the thing is, the underlyings drop significantly on ex-dividend date because by definition, ex-dividend date means the day that your underlyings they trade without dividends. So you'll see here, like you see FIAT, CONY, crash, TSLY. You see at the beginning of the day, they all like had a drop, like a cliff drop down because they paid out hefty dividends. Dips did not pay the dividends, which you saw in my previous video, because, like I said, I reached out to the YieldMax company because they're brand spanking new, and they assured me they'll have dividends, going forward. But because they're like about a week and a bit new before the dividend payout, that's what they're telling me. So I did take advantage of buying in, and I pretty much doubled my position. So I have now 10,000 in the FIAT CONY sandwich. And you'll see, actually, it's interesting because to see how things moved in the market, and also how the buffer is working, and also the payouts. So when it comes to the payouts, I wanted to reiterate. So I consider there's two phases. There's like the bulk phase. When you work out, you gain a lot of weight and you work out in the gym, your bulk phase, the growth phase. And then there's the shredding phase in the gym. So when I'm in the bulk phase, I actually am dripping in. I want the proceeds because the stock plus the dividend equals total value, because I'm a total value investor. I don't look at just the dividends. That's just looking at one part of the picture. And you don't just look at the NAV. That's another part of the picture. You want to look at everything together. You want your NAV to be preserved and then get a hefty dividend. So the thing is, I'm going to use the drip and then I'll rebalance. So I want to keep the allocation 5,000 to FIAT, 5,000 to CONY, 5,000 to crash, 5,000 in TSLY. But I want to see if my basis is preserved. So when I get the payout, I'll let the payout go into the, whatever paid out, which should go right back into it. And then I want to see what my value is, and I can see what I can rebalance. I did shave a few $100 off FIAT and put it into CONY. I shaved a few $100 off crash and put it into TSLY. So right now it looks like I'm down. I am down. The sandwich did okay job, but we'll see tomorrow when the payments actually come in. We'll see where it goes. And again, if I'm overweighted in one, I'm going to rebalance it into the other to kind of keep it 50-50 hedge. So it's supposed to be 5,000 FIAT, 5,000 CONY, 5,000 crash, 5,000 TSLY. And then with my NVDY dips, I'm actually doing 65-35. So I do believe in, NVIDIA may be a very good company, but it's a little bit on the speculative side. In my opinion, it could be hype, could be not. But I'm not really 50-50. I'm more like 65-35. Maybe I should change the allocation down the road. But right now, I put 3,500 into dips, and there was 6,500 into NVIDY. Dips is not paying payout this month, but NVIDY is, and NVIDY dropped today, so there was an opportunity. That presented itself today, and then tomorrow when I get the payment into NVIDY, I'll let it stay there again until my allocation goes up to $6,500, and then I could decide what to do. So that's how I have it. So basically 10,000, 3 sandwiches, 10,000 total per sandwich. Two of the sandwiches are 50-50. The NVIDY dip sandwich is 65-35. That's how I'm playing it right now. And then I have this like interesting Roundhill, Roundup, whatever company. They have something called QDTE, XDTE. They pay okay. I mean, it's the reason why I like it is because I know that the 0 date to expiration options, because I've played it, has a lot more premium than just synthetic cover call that you do weekly or monthly. So even if you are doing options, like when you're doing options on indices like the S&P 500 or XDTE, which does options on the S&P 500 daily options with overnight exposure, you do have more. The theta decays so quickly. The decays so quickly that you could have a lot more juice in it. So you could have a lot of juice with doing the whole entire index. Though the Magnificent Seven is the biggest bulk of the index, but XDTE, and they pay out weekly, so it's kind of appealing. But we'll see. I put 5,000 into this experiment, 2,500 into XDTE with however many shares it could buy me, and approximately 2,500 into, in QDTE and 2,500 into XDTE. You'll see that I'm down, down in both, but there is a payout every single week. I'll let the payout stay into the fund. Both of these funds have been losing overall. The question is, are the payments compensating for the loss in NAV? So, and also because the market is down, I thought to myself, this presents a buying opportunity. So you could see XDTE has been down since inception about 5%. But if the payments are, double or triple that, that's not too bad because it just opened up in March. But we'll see. We'll see how this plays out. Maybe I'll have to cut these weeds. I'm not sure. We'll test out on the Roundhill Roundup. And then like I said, the QDTE is the NASDAQ because it's more volatile. It's down actually 11%. I have mixed feelings. It took me, I've been going back and forth with this. I'm not too 100% with this fund because the whole idea, and I listened to the YouTube, one YouTuber had one of the fund managers on their show, and he was talking about the idea of overnight exposure is to gain some upside, whether it's limited upside in the market to preserve NAV, but they obviously don't seem like they're really preserving the NAV because the NASDAQ zero data expiration option is down almost 11% for the year. Yes, granted, they do pay good dividends. That's what I'm counting on. But if you go to QQQ, I would, you'll see that QQQ has not done such poor performance. So you could see here, if you go year to date, they're up 6%, 1 year up 15%. I was expecting them to capture some of the upside, not actually fall down. So yeah, that's something that I'm not too fond of. It's just an experiment. And then finally, when it comes to AMSI, I was hoping that AMSI had a 40 something cents, a 47-cent dividend. They're paying it out tomorrow, but today is ex-dividend date. And actually most of the day, it kind of hung out. It kind of didn't really give me a good, actually now this seems like there's a little bit of a buying opportunity, but it didn't really give me a good buying opportunity to buy in. I was hoping that it'll drop down today, but I didn't. In a way it's good. I do want to buy a few more shares. In a way it's good because it shows how strong Amazon is, that even with the 47-cent that they're paying out, their NAV is pretty much preserved. So in a way it's bad if you want to buy more and use this ex-dividend date as a buying opportunity, that it didn't drop as much as you expected. In a way, it's good because if you're holding the shares, it shows that it can pay out the dividends, and it has proven itself just until recently to be one of the best, one of the most preserved NAV underlyings. As you can see, they're down even with this craziness, 8.81%. QDTE, which is supposed to be a NASDAQ zero data expiration underlying for Roundhill, is down more than this. And you think that it would give you more beta, it would give you more, safety, but obviously not. As I'm saying this, I'm second guessing. It's just an experiment. I'm second guessing to see how that goes. If not, I'll just have to cut the weeds, but we'll see. So yeah, this is what I wanted to talk about today. I hope you guys enjoyed. It's a little bit of a shopping spree going on today. Probably could have bought a little car or something, but instead I'm just buying assets that are paying me money instead of liabilities. Anyways, I hope you guys are doing well. This is The Working Investor, over and out. Have an awesome week.